So we will be looking at a few more examples of marking up retail liquidity, which of course for us is the build-up phase of the lit cycle, and meaning that it will be induced essentially. So currently on the chart in front of us, we will be marking up relevant areas of liquidity and what retailers essentially see. And many of you probably could relate to this. So what we have here is essentially equal lows. You have your points there. So you have essentially 4 points where retailers get in, seeing this as a strong level of support. So whether it's support or equal lows, equal highs, or resistance, there's different names for it. So whatever you're familiar with. So essentially when price taps a line, of course, people buy. Now, on the opposite end of the spectrum, we also have the trend line. So we have people selling from these areas right here, where price taps several times in this area. And then, of course, in this current price action, price taps again. Again, the same concept that price has tapped into it several times, hence it's a quote unquote strong trend line for sellers. So you do actually have opposite ends of the spectrum of buyers and sellers into retail strategies over here. Okay, so next we can see exactly what will happen. Of course, your trend line is induced. I mean, not the entire high. You could see it right here. It's almost equal highs actually again. So your resistance or whatever you want to call it. But at this point, your trend line is, of course, invalidated. Now, of course, your support buyers are probably very excited because it is going in their direction. However, what we have upcoming is, as a liquidity point as well, is these equal highs. So you likely will have people wanting to sell as well from this point. So you're going to get these strategies everywhere, how different people perceive things. So you're going to get this constant up and down movement and bias, I guess. So let's see what happens next. So going forwards, of course, what we have, exactly like I said, a triple top, just clear that. You can see it taps one more time, perfect equal highs, and of course people likely will be selling right here. So going forwards, we have our inducement right here. Price just comes ever so slightly higher. It induces the whole triple top and then of course reverses. Now this is where the opportunity for breakout traders will come in. So you draw your line where price breaks out, whether it's there, whether it's here, wherever exactly you want to mark it, but it's essentially where price of course makes that movement outside of breaking this structure point. So breakout traders will get in anywhere between here and there at these relevant areas according to them. And of course, what they see is that price now will tap into this area and continue going higher, right? So let's see how that plays out. So firstly, you've got it tapped twice right here. So your breakout traders are now getting in. And then of course, we also get equal lows. So again, your support buyers. So we have two types of strategies now. We have also your equal lows / support. So it's a very strong area essentially to buy in the retail realm, you could say. And then of course, you're getting your reactions as well right there. So let's see how that turns out. But before that, let's see if there's any other liquidity targets. So what we currently have to the left is a trend line. So again, it's not the most perfect trend line, but that's how trend lines essentially are drawn, where you have all these multiple little trend lines everywhere, literally. You could see this, you could see this. So there's lots of trend line liquidity areas, but we're marking up the relevant ones that are more easier to see on the eye and the overall bigger picture play. So likely, of course, the trend line here, what happens is already at this point, we've had our inducement low taking out this. So essentially, of course, trend line being these remainder areas. So it's not an invalid trend line when it comes to a liquidity target. It's just not completely induced, you could say. However, of course, being the trend line liquidity, people have bought and then they realize as price slowly comes lower, it's taking out their trend line. So let's see how that works. Okay, so everyone at this point is induced, including the equal lows. So likely what would happen is people extend this line and expect price maybe to tap again. And then of course continue. So people would have got in at this point there, expecting price to continue higher. Your equal lows here are taken out, or support should I say. Breakout traders taken out. Literally every single retail strategy here is taken out. And then of course, perfect inducement low, taking out all of these levels of liquidity right there. So now you're probably looking like this, like an owl, probably not going to be able to sleep at night. But no, some of you are probably shocked that maybe you are probably in that situation of the liquidity points and not understanding why your trades sustained, or how they're only like one-to-ones, you know, like they're not understanding the market intentions. So I'll go through another example right here. Hopefully you won't be like that owl. Actually, you should actually. That's actually good, I guess. So let's mark up more liquidity points. Again, we're going through like the day-by-day steps just so we can understand how it's read. And that's important, not looking at it from hindsight, but seeing how it's read in the current moment. So what we have in this example is our trend line. As you can see, it's a perfect trend line tapping several times over here. So people are selling. Now, when we have a channel like this, we also have buyers. So this is where you could say the market is a little confused, or that's how people see it. It's not that it's confused, it knows exactly what it's doing, but this is how retailers essentially get confused and they don't know whether to sell or buy. Maybe they hedge both, but they're not truly understanding, and they're not understanding targets either. So they're taking these trend line buys and sells, just channeling upwards until forever, I guess. They'll just keep taking it for as long as they possibly can. So let's see what happens there. So what happens? The buy trend line failed, but no worries. We can use the breakout strategy. So of course you can see it failed. We had our inducement low, taking out this point here as well as this one. So essentially at this point, you also get your breakouts of the trend line. Sellers, you could say. So people likely will want to sell above upon there. So once this happened, it broke out, the pullback off that trend line, tapping back in. Of course, you get your reversal trend line type of trade. So you get the tap off the trend line, and now people expect it to go, of course, in the opposite direction. However, that did not happen, and price continued bullish instead. So the breakout strategy, of course, helps us understand that a little bit better. So price broke out of this point of structure right there. What that means is, of course, we expect price to tap into the line, not a very clear line, but you get the point. Again, like the previous example, the breakout strategy of the line after the structure is broken above. So let's see how that works. We got our breakout line right there in blue. Of course, what we expect, price reacts within that line, that zone. Then we also get this, what is it? Equal high. So we have resistance. Possibly, if you're taking both strategies, you'll be selling and buying. Again, like the trend line channel over here. But you're buying over here, you're selling at these points too. Now, of course, that depends on what retailers trade, but either way, there's lots of up and down confusion, you could say. So we have sellers and buyers in the market at this point on a retail basis. And it looks very obvious in those strategies, right? So what happens? Oh no, resistance. Traders are now induced, as you can see right here. Takes out, of course, these early sellers. And of course, our breakout traders are also induced, right? We get our first point there and then a second one there. So these are also induced. At this point, of course, your trend lines are both induced, because that trend line would essentially, whatever extend there, also get the trend line type of sell. But yeah, price continues. So now these trend lines are just completely irrelevant in that aspect of market intentions. However, they're really good for us to understand where people are buying and selling from and how we can target those and wait for essentially our relevant confirmations. So let's see what happens now. We have a POI essentially. So this is where your smart money traders get in. They see these imbalance points over there, and as well as a mitigation area here. Okay, so they take essentially random mitigation zones. They claim whatever break of structures over here. And of course, price made this really nice move. So now it's going to make a pullback. It's going to tap into this POI, you could say, which is of course point of interest. And then they expect price to then continue higher forever, making a new high type of thing. Now, there's a lot of those ones trading. There's a lot of Instagram ones, you could say, and that's kind of like the new trend, you could say, in quotes, that people trade smart money concepts, not really knowing what they're doing, but claiming to know what they're doing. So let's see how price reacts. Perfect. So price now does that pullback that they want it to do. It reacts actually really nicely. So that's really good. Let's see what price then gives us. Okay, gives us a perfect reaction, right? And now this is where, of course, we're mocking our gurus, where they post against their Dubai window and be living the life, posting these screenshots of trades, showing this push, and it looks really pretty in the moment. Now, of course, this is just reality. I know it's probably me mocking them a lot, like a lot of people, where they show this lifestyle and a trade like this, but they're not actually understanding it. And that's just a reality. So they don't like to admit this, but the reality is they don't understand market intentions. So once price gets here, they're not going to tell you that it actually reversed on them and it's a break even at this point, or they partial the 1 to 2 maybe over here, expecting this so-called decisional zone to have sold from. So they take a loss there too. So that's important to understand. Again, it's a little bit mocking, I know, with how I've worded it, but of course, I hope you can understand that this lifestyle type of what goes on Instagram and all these social media is not how you should trade. They don't show you how to trade. They show you a lifestyle based on them selling, of course, courses. Anyways, I'll stop that rant. But nevertheless, of course, that's not wrong to take. So that's another thing I will tell you. Of course, we know it as a trap, also known as a smart money trap. But the point being is they can be traded, but you also have targets. And of course, in lit, you will also be taught targets of how you can exit at this point right there and take sells instead. So that's why intraday trading is really, really nice, because you can take trades like this. You can take the sell, you can take this buy as well, and the sell, and take these consecutive sells there. So you can take multiple opportunities and really take advantage of the market, as well as understanding your targets for take profits, which is really key, as I don't think most mentors, so-called mentors, should I say, know how to do that. So anyways, of course, price reverses on them, your smart money trap or your POI for smart money concepts is taken out, and then they just claim it's whatever, like a justified loss type of thing. Anyways, this is where, of course, your structure traders also get in. So they see this as a break of structure. It's ever so slight, but it's, of course, a break of structure. Considering this is your point of structure, we go bullish. That's your new, well, essentially that's your new high. You see what I mean? Those are your new highs. You get these kind of reversals. This is how they basically mark up structure, saying now this is a pullback, right? So we get that, and then of course we can take sells. Now, where would structure traders essentially see sells? They combine smart money concepts, meaning these imbalance zones, these areas where there's nice POIs, you could say, or mitigation areas. So essentially we have one right here. We have a really nice imbalance. Now, looking everywhere else over here to the left, there really isn't anything. So essentially your only real point is this zone right there. Maybe you could also mark up there, but of course this is your essential zone. So marking up this zone, we have a POI, we have strong confidences. It's our only remaining imbalance after this break of structure over here. Now, at this point, we also get our trendline sellers getting into the market. And this lines up actually perfectly with this POI. So you have major confluences, or whatever you want to say, the major area where you should sell. So we have trendline sellers as well as your smart money concepts combining structure traders into this zone. So perfect. We have our reaction. As you can see, this reaction right there, we get the reaction, which is really, really nice. Unfortunately, it's considered a justified loss. According to all these retail traders, they say that's a justified loss, when reality is that is not your loss. What you've had is an inducement, not a so-called break of structure. So now we can actually expect price to continue higher. Now, this is where it just gets very interesting, and then, like, I really don't understand when people say it's a justified loss, and it's because it's really frustrating for you as a trader as well. If you've been told it's fine, it's okay, when it really isn't. They just don't understand the market, so they say it's okay. This is just the one time it probably doesn't work, but they don't tell you all these other times it does not work. Simply just does not. So, anyways, you have your loss there too. Now, of course, what we also have, we're not finished. We have equal highs essentially right here. So we have a strong resistance, price tapped here, of course, now taps here. So maybe upon the third tap, you get, of course, your resistance sellers, also known as equal highs, essentially in the liquidity aspect. And we can now see triple top strength. So now, of course, you definitely will get your resistance sellers selling at this point. So now they sell from here, and then what happens? They get induced. So essentially, it's really, really key to understand, of course, these retail strategies may work here and there. They give you this illusion that you get a 1-to-1 or you practically lose 10 times and stuff, and 1 out of those times it's fine. But of course it's not. You get your inducement of every single liquidity strategy we've marked up here. Not liquidity, sorry, in our eyes it's liquidity, but it's retail strategies. And of course the perfect ones are these equal highs, equal lows, and trend lines. So you also get, of course, inducements of liquidities like such here, only to continue higher, right? So it's really, really key to understand marking up your liquidity levels. Now, of course, it will take a bit of time for you to probably get out of that mindset. And of course, once you see it, you can't unsee it. That's the biggest thing. Like, so now you've seen it, you're probably like, wow, like I traded that, or maybe that's how I saw the market, or in a similar way. And then you realize that actually, wow, like, you know, it's wrong, and you're actually believing that it's wrong and not being told these false lies. So I hope you understood these 2 examples of liquidity. Now, it's of course important that you now start to mark up the same levels and wait for the inducement.